It's a いいです Hello, good morning. Good morning, everybody. Good morning, everybody. I hope you're all fine this morning. My name is Brenda Katarika Opus, and I'll be your moderator today. I'd like to start by apologizing for our late start. We're very sorry for that, but we request that we get into our program straight away, and we will try as much as possible to fit in within our time. So without wasting much time, I'll ask Noreen, my colleague, to lead us in a word of prayer. Then we shall go into introductions of all our participants. And then we shall have the ED of Uganda Export Promotion Board do the opening remarks, after which we shall have our representative from Ministry of Finance take us through the government financing programs and what government has to enhance exports. We shall then go down to Bank of Uganda, where they'll speak to us about the ACF. You will understand what that is once the representative from Bank of Uganda speaks to us. We shall then go down to Microfinance Support Center. We are yet to get him on board. We'll just find out where he is and what time he can come in. Now, unfortunately, we won't have Uganda Development Bank today, but they sent in a presentation, a short one, which I will take you through at the end, once my colleague Noreen has spoken about market price information. So like you will note, our training today is very specific. It's on finance. For those who have been on our export readiness assessment online, you have noticed that we do assessment in 8 key areas, one of which is finance. So about 2 weeks ago, we had a general training where all of you participated, but now the trainings we're having going forward are specific to those 8 areas. Finance is one of them. We have one on marketing, we have one on production, we have one on planning and organization. Then we have one on contracting and how you develop contracts. So all these trainings you'll be informed when they will be happening. And we shall deal mainly with those who in their assessment showed the need to specifically address issues in those sectors. So with that brief introduction, I'll ask Noreen to lead us in an opening prayer, and then I will call upon each of you to introduce themselves. Noreen, over to you.
Thank you, Brenda. Good morning, participants. My name is Noreen Kamot. Can we bow in a word of prayer? Loving Father, we thank you so much for this time. We thank you for the gift of life, and we thank you for the opportunity you always give us to meet, provide us to meet in whatever means, my Father. As at this moment, as we meet to prepare ourselves in export, especially the financial aspect, my Father, guide us, give us the wisdom so that we are able to successfully implement our business ventures, my Father, for the good of our country and for the good of our nation. All this I'll pray in the almighty name of our Lord Jesus Christ.
Amen. Thank you, Noreen. Now we will go down to our participants. I will ask that we start with Alan Okello. Okello, please unmute and introduce yourself. Alan, can our IT person unmute Alan Okello? Alan Okello, you're unmuted. Can you introduce yourself, please? Is Alan with us? Alan, can you unmute? Okay, I'll go to the next person. That is Chris. Chris, you can unmute and progress.
Hello, can you hear me?
Yes, we can. Please
Yes.
progress.
Thank you for the opportunity. My name is Chris Tunanuche, and I work as the sales and marketing manager for a company called Clinic Master International. This is the company that develops software for health facilities. Thank you for the opportunity to be a part of this meeting.
Thank you very much, Chris. Can we have Christine Tusime?
Okay, good morning. Thank you very much, Brenda, for the opportunity. My name is Christine Tusimi. I also work with Clinic Master International as a business development officer. Thank you.
Okay, you're welcome, Christine. Thank you.
You're most welcome.
Okay, next I'll have Donald Ochen. Hello, Donald, can you hear us? Donald, unmute and introduce yourself, please. Okay, we'll come back to you later, Donald. I'll now move next to Enid Natukunda.
Yes, good morning. Can you hear me?
Yes, Enid, we can hear you. Please go ahead.
Thank you. Thank you. I am Enid Natukunda. I process shea butter. My factory is here in Nigeria, and I'm happy to be part of this meeting today. Thank you.
You're welcome. Thank you very much, Enid. Donald, I can see you're on now. Can you introduce yourself, please? Donald Ochen.
Yes, are you hearing me?
Yes, we are.
Okay, Donald Ochen is coming from JSC Commodities and Export Limited. We are into mailing, agribusiness processing, which is currently we're doing mailing of composite flour, maize, and other items. We're working towards processing meat products, pork specifically. We aspire to work with smallholder farmers to explore businesses continentally and globally. Thank you.
You're welcome, Donald, and thank you very much for that introduction. Can we kindly have Gloria Faith Atto? Gloria, you can unmute yourself and introduce yourself, please.
Hello. Hello.
Hello. Please go ahead, Gloria. We can hear you.
Good morning.
Good morning, Gloria.
Good morning. Yes, please. My name is Gloria Faith Atto. I'm the administration assistant at Blue Hippo Produce. We deal in export of fresh produce. Mainly, we are dealing in avocado at the moment. Yeah, but in the future, we shall include other products like spices, just exporting them.
Okay, thank you very much, Gloria. You're welcome. I will now ask Joshua Baguma. Joshua Baguma, you can unmute and introduce yourself, please. Joshua, can you hear us? Joshua? Okay, as we wait for Joshua, I will go to the next person. I'll ask Lydia. Lydia, can you hear us? Please introduce yourself.
Yes, I can hear you. Good morning. Good morning, Brenda. Good morning, everyone. My name is Lydia Nakayenze Schubert. I am the founder of Onka Planta Uganda Limited. We do process, we develop products from Ugandan indigenous plants for various applications. And right now, we are currently extracting shea butter in Otuke and marketing it in Uganda and everywhere else. Thank you.
You're welcome, Lydia. Thank you very much. Next, I'll ask Michael Bagia. Please unmute and introduce yourself, Michael.
Yes, hi. I'm called Michael Bagia and I'm representing Timeless Ventures Uganda Limited, which is into export of fresh fruits and vegetables.
You're welcome, Michael. Thank you. Next, I'll ask Simon. Simon, can you hear us?
Good morning.
Good morning, Simon. Please introduce yourself.
My name is Senkuvuge Simon. My name is Senkuvuge Simon,
Yes,
an administrator from a company called Universal Food Supplies Limited. Yeah, and we are intending to start exporting fruits and vegetables. And in the company, I act as an administrator. And at the moment, we are going through a process of export readiness checkup. Yeah, that is it. So that's where we are, and
Okay, thank you very much, Simon.
I felt like, it's worth, being.
Yes, Simon, you're in the right place, and you shall be taken through the training to prepare you for export. Next, I will go to Steve Nicholas. Oh, sorry, that's one of us. Let me see who else hasn't introduced themselves. Is this Papai? Let me see the name. Unfortunately, some of the names, the way they are not very clear. Is it Papias?
Yes, Papias.
Yes, Papias, please introduce yourself. You're welcome.
Thank you. My name is Tumusingize Papias. I work with Curad Agribusiness Incubator. We have been organizing farmers to produce quality produce and export through other exporters. And now we have gone to a level, we want to do export ourselves. We have gone through export readiness training, and we have been recommended by UEPB. So basically now we are to apply for inspection. Our farmers are ready to do MAIF audit. Our pack house is ready for inspection. Basically, we are now ready to do export. Thank you so much.
Great. Thank you very much. You're welcome to the training. I think I am now left with the UEPB staff who haven't introduced themselves. I'll start with Mr. Karuhanga Sam. Are you on? Can you introduce yourself? Okay, as we wait for him, we'll have Sam, can you hear us? Okay, I'll go to Stella. Let's see your name. Stella, yes, introduce yourself, please.
Good morning, everyone. My name is Stella Aikoru Masiga, and I work with Uganda Export Promotion Board. Thank you.
Okay, for those who haven't introduced themselves, I will ask you to introduce yourself as we go on. Mr. Okecho, are you with us? Maybe you could introduce yourself as well. Please unmute and introduce yourself, Michael.
Yes, good morning. Good morning. I'm called Okecho Lawrence Michael from the Ghana Export Promotion Board. You're most welcome, and let's take this very seriously. Thank you.
Okay, thank you so much for all the introductions. I think now we know each other, so we shall now proceed into our next part of the session. We have 5 panelists. They will introduce themselves as they do their presentations. Now I'd like to request the Executive Director to give us the opening remarks. Is ED on yet? ED, you're welcome. Let's give ED a few minutes. We shall get him shortly on. Otherwise, you're very welcome to Uganda Export Promotion Board online export readiness workshop. Some of you introduced yourself and spoke about having completed the assessment. and we appreciate all your efforts in doing that. You all appreciate that exports involves a lot of dynamics, so we need to go through proper training. So that's why we have this kind of training where we bring you experts to speak to you. So I can see now the ED is on. The ED is on. Good morning, ED. ED, good morning. You're welcome to the finance workshop. You can please proceed with the opening remarks. Thank you.
I thought I am so very photogenic, so I thought I would be visible, but I am told we are having problems with the video because I like to be seen, but now let me speak to you when you cannot see me. Morning, ladies and gentlemen. It's my pleasure to talk to you this morning and to welcome you to this virtual seminar or workshop on export readiness, and especially focusing on finance. Uganda Export Promotion Board is supposed to coordinate all export-related activities. It is also supposed to facilitate export-related activities. We are supposed also to be involved in the development of exportable products. We are supposed to create exporters, but also be involved in creating exports. And then ultimately, we are supposed to be involved in the promotion of exports. And later on, we are supposed to do what we call exporter aftercare support. Now, in our processes and in our activities and in our engagements with the private sector, especially via associations, over the years, we have found that one of the challenges has been the issue of affordable credit, the issue of available credit. I think now I can, seems that I can now start the video because I see Brenda is still on.
Yes, Edie, you can start your video.
Yeah, now I have now to. Yeah, so ladies and gentlemen, let me continue with my speech. I was saying that during our work in our engagements with the private sector, especially via associations and individual exporters that we have interacted with, we have found out that affordable credit, available credit has been a challenge. Most of the credits in the banks is short term, and if some of you know the Basel rules, Basel 1, Basel 2, and 3, if you know these rules, the banks are supposed to lend on short term, and if you want to get long-term credits, but which has been short term, it makes it expensive. So the National Export Development Strategy by our ministry, and to which we were contributed to, and now the NDP 3, we are looking for export finance. We are looking for export guarantee scheme. We are looking for export refinancing scheme. We are looking for money to support exporters. And you knowing our exporters, most of them are SMEs, and some of them face big challenges of capital. and for operations, for export, for management. We think that today's workshop or seminar should help us understand where to get affordable credit, where it is available, how, where, and when. And I think Uganda Export Promotion Board afterwards will be meeting with the providers of finance and discussing how we can partner to support exporters to engage in gainful and meaningful business. Ladies and gentlemen, I think we can have our virtual meeting. I declare it open now and hand over to the events coordinator. Thank you.
Thank you very much, Edie, for the opening remarks. And like Edie has said, going forward, we shall get in touch with the different institutions that are represented in this training, and we shall see how to craft stronger and better working relations to enable our exporters do their export very well financed. So without wasting much time, I'd like to invite Madame Ireva Annette from Ministry of Finance. Annette works with Ministry of Finance but handles the export desk. And in addition to that, she is our member of the board. So Annette, you're welcome to give us a presentation on government financing programs that enhance exports. So Annette, if you're with us, you can, yes, Annette is with us. Please go ahead. She has a presentation. You can share your presentation and proceed.
Good morning, members.
Good morning, Annette.
Brenda, are you able to flag the presentation that I want to share?
I'll do that shortly.
Okay.
In a minute. Okay, can you see the presentation?
Okay. Good morning, everyone. Once again, I want to take this opportunity. Thank you, EPB, for organizing this workshop. For sure, export is the key. So once it's given this due attention and credit, we know we are moving in the right direction. So without wasting much time, my names has already been introduced. Annette Ireva from Ministry of Finance. I'm a principal economist. I sit on the desk that handles trade, tourism, and energy as the section head. Thank you. As a an outline, we shall look at an introduction, the state of the export sector, the challenges that are affecting the growth of the export sector to better appreciate where we are and where we're supposed to head. We shall look at the financing interventions, an item on resource envelope for the financial year 2020-21 and the medium term. I had put this in, but I'll leave it to the MDs because they will have more hands-on information in this regard in order not to duplicate their presentations. So as a word of introduction, you are all aware that the vision for the NP3 is to transform Uganda from a peasant to a modern and prosperous country. In realizing this, the country's competitiveness for sustainable wealth creation and employment and inclusive growth is key to increase household incomes and improve the quality of the life of Ugandans. This is where the private sector is the bigger engine in driving inclusiveness, because it carries on a big mass of stakeholders up to the bottom of the grassroots. The strategic direction of the NDP3 has always been echoed and is hinged on the need for rapid industrialization based on increased productivity in sectors like agriculture, while nurturing the supporting potential of ICT, minerals, oil and gas sectors. In order to have this as a success, strategies have been included, for instance, agro-industrialization, fast-tracking oil and gas, that is long awaited for, and import substitution to reduce on the burden of importing too much. Accordingly, we anticipate to increase the value of manufactured exports from 12.3% to 19.8%, increasing the ratio of merchandise exports as a proportion to GDP. This is from 12.7 to 16.5, and correspondingly intermediate goods from 18.6 to 25.5%. Next slide, please. The state of our export sector. Currently, Uganda's total exports of goods and services have been growing at about 6% per annum. This is in the cap of the last 10 years up to 2019, with an exception of this year, which has had unique challenges. The import bill similarly has been increasing, so it is worth to note at a percentage of about 4% per annum, as at 2019. Notwithstanding the above, Uganda remains a net importer, much as we are trying to see some elements of progress. We go behind a bit. The previous slide, please. Yes. No, the next one. Yeah, right there. So, you've lost me. The previous slide. Exactly. Yeah, around here. So we're out here, export and import values respectively. The COVID pandemic, as we all know, has hit us so hard and is still a major threat to international trade and the global economic growth. But countries are accordingly trying to revise, respectively, the economic growth projections in order to try and fit in that. The case of Uganda being at 2 to 3% from the 6. So next slide, please. Okay. We see that Uganda's major exports are mainly gold, coffee, fish, base metals, maize, beans, tea, edible fats, cement. The list is enormous, up to flowers. That shows that we still have a big bracket within which to export. And these are products that are being appreciated on the international market. Gold to date is the leading forex earner for Uganda. This has surpassed coffee in 2018 because coffee has been our traditional big bull in terms of earning gas forex. Service exports, as indicated, have increased by 56% over the 10-year period, from 1.3 billion in 2010 to about 2.2. Travel-related services in the country also seem to be showing significant additions to the GDP in terms of revenue. Whereas in nominal terms, Uganda's export value has grown over time, we still need to look at the subsector using the export-import ratios. Because realistically, we realize that the export-import ratio is still low, less than 1, at about 0.5. This shows there's still much room for us to improve, because Uganda is seen as being a predominantly an import market. Look at challenges facing the growth of the sector. These I'll try to read them verbatim because that is where the pivot, the turning point to making success is. Among the major constraints to enhancement of export performance is the inadequacy of financing in the export sector. Ugandan producers of export goods and services need but lack medium to long-term funding. This has already been echoed by the ED. It is a challenge and it is a big threat. This is ideal to make necessary products and be able to compete in the export markets. Funds are needed for putting up factories and other physical infrastructures, as well as buying inputs. In addition, there's a challenge of uncompetitive goods and services, because once goods are produced, we realize the quality, one way or another, is still wanted. So we still remain vulnerable. On account of that, commercially disoriented production structure, much of what the country produces and aspires to place on the regional market is uncompetitive. That's already been echoed. Another key impediment to growth of the export sector is limited value addition. You put too much energy to production, but once you do not put value to that product, someone else will do it. And before you know it, is riding on more profits than you who has put in a lot of effort. So Uganda continues to export agricultural products, mostly in their primary form, with little value added. All the traditional crops are exported in their most basic form. Okay, you can proceed to the next slide. This is where the query is. The financing intervention. Having realized that those are the challenges we have at hand, how then has government put modalities to try and curb the challenges and grow the export sector? The ministry has so far taken the following steps to alleviate some of the major challenges. The Export Promotion Board got an enhancement of some funds that could not be so sufficient, but at least a starting point to implement the marketing strategy and aggressively engage potential buyers and link them to Ugandan producers. Additionally, in this financial year 2020-21, government committed to capitalize UDB to a tune of 1 trillion and accelerate import substitution and export promotion growth through business investments in agriculture, pharmacies, especially those that look at value addition. These are areas in which you'll be able to tap into. In order to strengthen the industrialization and value addition, UDC has been allocated 100 billion in this financial year. This is mainly for the strategic and sustainable investments geared to overall economic and industrial development of the country. If UDC capacity is strengthened, the more viable investments we shall see as a country and the economy henceforth. Additionally, the Uganda warehouse receipts system needed a revamp, and that was done, and the warehouse authority was henceforth provided with an additional 4.7 billion in this financial year 2020-21, of which the 750 million would strengthen the institutional capacity for them to be able to inspect and sensitize the respective silos around the country, because the storage is very key. If you do produce quality, but you do not store well, you might lose out on the value, along the value chain. Okay, next slide, please. As a way of conclusion, exports are the key drivers of economic growth that will deliver the NDP 3 objectives. That is key, and that is where we should put all our efforts. Thanking UAPB on that one. So as such, we shall make a strategic investment to enhance the values that perform, make the economy's performance vibrant. We also have to know that the budget process for this financial year has changed from an output-oriented budgeting to a programmatic budgeting. In this case, resources are usually pooled onto one program. Numerous stakeholders all work towards achieving one program in line with the NDP 3 interventions, and for UPB it is clustered under the private sector development program. This is alongside UNBS, MSMEs, and export trade. The program approach will bring out a stimulus. It will be a stimulus to export because concerted parties are coming together. When you have an issue with standards, UNBS will know we are all working towards the common goal. So to an exporter, really this should be a bonus to us to grow exports. Despite the effects of the COVID pandemic, the government has supported government and private sector interventions. These boost export performance in the short term and it will mitigate the COVID-19 impacts in the medium to long term. Therefore, it is important we note the following, that improvement in productivity and a move towards value addition is critical. Value addition. let the products gain more value. Please, the previous slide. I'm almost winding up. I could be taking more time. Value addition is critical for the continuation and expansion of the growth. Next slide, please. There is an urgent need to close the gap in the provision of cheap financing to support export-oriented production, which implies that an opportunity also is available to the private sector, because government can play a greater stride, but without the private sector, it has where it can stop. So the private sector, equally in the financial sector, still has an open window to engage and provide some financial support. Therefore, the highlighted interventions that I have talked about do not exhaust all the supporting interventions that are being financed, the different ministries, the other departments, and other agencies. So to mention the Agricultural Credit Facility and the Agricultural Insurance Scheme, Microfinance Support Center, other government-owned commercial banks. These ones also have the other services, which I could not elaborate on because they are more hands-on and on ground in rolling out this mantle, much as the ministry will provide an enabling environment to them. So they will be providing more details in the subsequent sessions. I beg to submit. Thank you for listening.
Thank you so much, Annette, for that very rich presentation. We greatly appreciate. I think exporters now appreciate the role they play to building this economy, because with all Annette is saying, it won't be possible if we don't have exporters that access these facilities. So Annette, thank you. We shall have questions at the end. For now, allow me to invite our representative from Bank of Uganda, Madame Rosette Bamwine. You can proceed with your presentation, and then we shall have questions coming in at the end. Madame Rosette, are you on?
Yes, thank you very much.
You're welcome, Madam.
I thought I would present after Microfinance Support Center.
Unfortunately, Microfinance Support Center is still held up. So
Okay.
we request that you proceed if you are prepared.
Okay, thank you. Let me connect.
Okay, so I'll unshare that. So are you able to connect now?
I'm sooner. Hold on.
Okay, we can see your presentation. Please.
Yeah, but
Full screen.
I was ready for 11, but let's move on.
Sorry, Madam.
Okay. Yes, good morning, all the participants. My name is Rosette Bamwine from Bank of Uganda. I head the credit and the marketing of the Agricultural Credit Facility. And I'm here to inform you about the opportunities under the Agricultural Credit Facility, especially for exports, which is on top of our agricultural value chain. Okay, I just have a preamble. I thank the previous presenter because he has mentioned most of the things that I wanted under preamble. Agriculture is a key pillar of the Ugandan economy and accounts for approximately 23% of GDP and 87% of the working population in rural areas are engaged in agriculture activities. Agricultural products account for the largest portion of Ugandan exports, constituting 80% of total exports. The chief exports being coffee, 22% of total exports, coffee, and followed by tea, cotton, copper, oil, and fish, and of course the horticultural products. This may not be the latest. I know someone maybe will inform you of the latest. Exports are in the final stage of agricultural value chain, and most of them are to Sudan, Kenya, DR Congo, European Union. That was before the COVID lockdown. One of the key development strategies under the National Development Plan, NDP3 now, is agro-industrialization, which aims at increasing commercialization and competitiveness of agricultural production and agro-processing. In spite of the above key factors, however, most financial institutions were initially unwilling to advance credit to the agricultural value chain, especially farmers, due to the high risks involved in agriculture, resulting in too high cost of lending. It is against this background that the Agricultural Credit Facility was established in 2009 with a key objective of commercializing agriculture, focusing on value addition, modernization, and mechanization of the agricultural sector. The Agricultural Credit Facility background in itself. The ACF, which is short for Agricultural Credit Facility, is a risk-sharing public-private partnership between the government of Uganda and the participating financial institutions. It provides medium and long-term financing to projects engaged in agriculture, agro-processing, and the grain trade at more concessionary terms than what is offered in the financial sector. The ACF finances all projects along the agricultural value chains that include the SMEs and the large-scale aggregators, the youth and the women, as well as the exporters of the agricultural products. The structure of the SCF. It's not coming on properly. Yes. The structure of the SCF includes the following. As you've heard, it is a partnership between the government of Uganda and the participating financial institutions that include the commercial banks, the credit institutions, the micro deposit taking institutions, and the Uganda Development Bank. It was initiated in the year 2009, as you see later, and mostly provides provision of medium to long-term financing, which was not initially being issued to the farmers and agro-processors. Bank of Uganda plays the role of the fund administrator. What are the terms and conditions under the Agricultural Credit Facility? The terms are concessionary, like you have heard. They are more favorable to all the participants or all the actors along the agricultural value chain. In terms of the period issue, the long and medium term loan period, in terms of the interest rate, in terms of the grace period, among other favorable benefits. The maximum loan amount the scheme can offer is 2.1 billion, but this can be increased to 10 billion for projects that add significant value to the economy. The maximum loan period is 8 years, but for the grain facility, it is 2 years. The maximum grace period is 3 years. Grain facility, we don't give a grace period. And the minimum loan period is 6 months, with the grain facility still it remains 2 years minimum. It depends. It can also take any time you want, but the maximum for it is 2 years. The maximum interest rate for all other activities along the agricultural value chain is 12% per annum, but for the grain facility, it is 15% per annum. And the facility fees, these are the fees that most of the applicants pay to the financial institutions whenever you are borrowing. But for the facility, it is fixed at 0.5% because we are well aware that some of the financial institutions charge higher fees, and you find that you have spent a lot just in fees. And the government of Uganda contribution, remember, it's a partnership. The government of Uganda contribution, when your application goes through a commercial bank, it is 50%. For example, if you are borrowing 200 million, it means 100 million will come from the government of Uganda and another 100 from the financial institution. But if you're borrowing from your application goes through a credit institution or micro deposit taking institution, then the government will contribute 70% of whatever loan you are getting. And the good news is that in order to facilitate or to show that it's a risk sharing mechanism and to motivate the financial institutions to lend to this very risky sector, the government does not charge interest on the portion that it contributes. It gives the financial institution that is lending so that the risks and any inherent risks associated with agriculture lending are covered in what would have been given as interest. But as for the financial institution, it charges interest on 100% amount. I don't know, maybe when you ask later, you'll understand this better. What are the sources of funds? Like you've heard, mostly the sources of funds are contributed by the government of Uganda and the participating financial institutions. I hope I mentioned the Uganda Development Bank as one of the eligible financial institutions. The MDIs, I've mentioned this already, and credit institutions contributing 30% only, while the commercial banks are contributing 50%. The reason for giving the MDIs larger contribution from the government is that most of them, when we started, the MDIs and credit institutions were actually not participating under the scheme. And along the way, we realized that most of the SMEs were being left out since they bank with credit institutions, circles that are regulated by Bank of Uganda. And that's why when we went and asked, a survey was carried out, and the reason given was that they lacked liquidity to lend. That's why the government of Uganda said, no, we cannot exclude this very important part of the borrowers, the SMEs, the micro borrowers. And that's why the government of Uganda decided to put a portion that was bigger than what they are putting for commercial banks that have more depositors. So what is eligible under the ICF? Most activities under the agricultural value chain are eligible. And these include right from opening land up to the exports. We finance them. Acquisition of agricultural machinery and equipment, post-harvest handling equipment, storage facilities that include cold storage, that include cold trucks. If an exporter wants to buy a cold truck, transport your perishable goods from one end to the airport or to the source of the marketing port, then we finance it. Warehousing, any modern warehouse, should you wish to construct a warehouse, should you wish to improve on your warehouse, should you wish maybe to do the panel beating, the electrical bit of it, we finance it. The packaging materials for our exporters that may need modern packaging materials, adequate packaging materials, we do finance them. Agricultural inputs, these ones include pesticides and fertilizers, seedlings, if you want the seeds and all that. Then land opening, paddocking, bush clearing, irrigation facilities, water excavation dams, all these are eligible. More on eligibility. Biological assets like banana suckers, I hope you know, in case you want to go into banana farming, the suckers, we finance them, the fruit seedlings, the chicks, the livestock for restocking, and any other that you may need to restock your farm, we do finance it. Agro-processing facilities that include machinery and equipment. This one is part of our key objective, being mechanization of agriculture. We want to move away from exporting raw materials to processed goods. And we have to some extent achieved this. Machinery and equipment, if you wish to import machinery and equipment, if you wish to hire machinery and equipment, if you wish to do more of the processing instead of exporting the raw goods. For example, I'll give you an example of some of the sectors like the tea sector. Most of our tea used to be exported in Mombasa in their low form to the auction market. But we lent to some of the big aggregators, and as we talk, most of them are processing this tea and packaging it, which you can find on our in our supermarkets and in other shelves. And some of it is exported when it is already processed and packed. We also provide working capital. The working capital we provide, incidentally, does not exceed 20% of the total project cost. For example, if you are borrowing like 500 million, the working capital will be 20% of that 500 million. And it will go to farm labor, machinery, installation costs, hire specialized machinery in case you cannot afford a machine or a big implement equipment. We can give you funding to borrow that increment to hire this equipment so as to mechanize your farm, among others. We have limited the working capital because we want to avoid misusing some of the borrowed funds under the scheme. Initially, some of the people just want so much and you say, I've paid the electricity bills, I've paid water bills, but now we need cost sharing. That's why we cover only 20% of the working capital. Then we have what we call block allocation. Block allocation, as I said, our initial objective being commercializing agriculture, we started with the big projects, big farms, big exporters, because we were interested in our farmers moving away from subsistence farming to commercial farming. But along the way, we realized that SMEs also feed into this. And also you can commercialize right from a small scale. Most of our farmers do not have land. Most of them hire land on which they do their farming. And that's why we said then, let's include this important sector of the SMEs under block allocation. In this, we give each individual up to maximum of 20 million Uganda shillings. And also another important bit is that most of the clients or would be clients of the farmers, of the traders in the grain and the like, did not have collateral to secure the loans they were borrowing. The youth, the women, they are very active in this sector, but they don't have collateral. And we agreed with our financial institutions that up to 20 million can be lent out to these very individuals that lack collateral to secure the loans. And they can use alternative collateral, for example, chattel mortgage. They can use character-based loans. You have to borrow and be paying back your loan in time. You can use your cash flows. Here we need financial literacy, record keeping, whereby your records, The records you keep, the selling, the buying, the expenditure, the losses can determine the loan you are going to take, and the bank can trust you to give you this loan without the usual landed collateral or any other tangible collateral. What the ACF does not finance. We've financed other things, but what it doesn't finance includes purchase of land. If you're buying land, no, please. Planting of trees. We don't finance trees because most of the trees actually mature in 8 years. The modern ones can mature in 5 years, but still the grace period of 3 years that we give, you need to pay the interest rate during the grace period. And some of them, if you've just planted trees and you don't have another business, you may fail to pay back this loan. Financing an existing facility. If you borrow and you default, and you come to the SCF to borrow for repaying such a loan, we say sorry. Trading in agricultural commodities, with the exception of the grain. Apart from the grain trade, the rest of the trading, we do not finance it. And then freight charges. We have heard some of the exporters, maybe listening or attending this workshop, complaining of the freight charges. We can finance anything that you want along the export line. Purchase of the goods you want to export, provided they are agricultural commodities. We can finance packaging materials. We can finance, I'm talking about what we can finance for exporters and why not the freight charges. We can finance the cold trucks. If you want to buy a big truck, like I said before, if you want a cold storage chain, we can finance it. We can finance transporting it to the airport if you want to hire a truck. We can finance branding your commodities for packaging materials and the like. But as for freight charges, I'm afraid we do not finance them as per policy. But hopefully, when we review the MOA and you convince us that it can also work, we shall join in and finance it. Okay, some of the projects financed, I had mentioned them. Irrigation, you can see, the modern cows. We are interested in modernization, really, as per the NDP 3. Mechanization, industrialization is our goal, and of course, market linkages. The collateral requirements. The ACF loans are secured. Primary securities, machinery and equipment financed where applicable. But the PFIs are responsible for ensuring that loans are adequately secured in accordance with each financial institution's credit policy to protect the interests of the financial institution and the government of Uganda. Some people many times complain this is government money and they are not giving us what we want. Would like to emphasize this, that it's a partnership. Whatever loan that is given out, whether an exporter, whether a producer, is shared because we want to share the risks in this very important sector. But remember, I've talked about collateral, and then I just want to emphasize the block allocation where you can borrow without collateral. And by saying machinery and equipment are primary collateral, means whatever machinery you buy can also act as collateral. We are also encouraging the warehouse receipt system, though the policy may not be out so well, but it is also eligible as collateral. I just want to tackle the financing the grain trade in isolation, and I request that the rest of the exports also be under this very important grain trade, because it is through the grain, most of the exports actually, agriculture in nature, and the grain contributes a bulk of these exports. That's why the grain, we are giving it special conditions. By the way, on the terms and conditions, I said 2.1 billion, but it can be increased on a case-by-case basis. And the case-by-case basis comes in when it comes to the grain trade. The grain trade, we can give you as much as You may need 10 billion for the time being, but should we get more capitalization, we can increase as per the memorandum of agreement. But this amount is depends on the economic benefit. And when I say economic benefit, I mean how many other people are going to benefit from you. If you are a big aggregator, for example, big exporters of sugar, you are processing sugar, which we have given to many of our clients, the machinery and equipment. But how many outgrowers are you supporting? The grain is helping us a lot with economic benefit to the economy, in that most of the grain traders have a chain of other traders that buy the grain from the villages. You find many people being employed in thousands, 50,000, supplying one aggregator. And these aggregators, we have actually financed a number of modern warehousing. These aggregators have warehouses that we have financed, and these small scale farmers will quickly, will quickly supply to these big aggregators the grain by benefiting the small scale farmer, the large scale farmer, the cooperatives, the circles, the groups that are all engaged in the grain trade. And the grain includes various crops depending on the region you are coming from. For example, northern Uganda, the grain may be different. It may be sunflower, it may be simsim. The western and other countries, the central and other regions, there it may be maize, but it depends on how you define it and you can defend it. What are the major, I would like to talk about the major challenges of grain exporter, exporter, I hadn't seen this, in isolation. One, the major challenge has been inefficient public financing schemes and poor understanding. You'd excuse me, I thought I was presenting at 11. Some of this is not well edited. Understanding of agriculture sector by financial providers, failure to enforce standards for grain crossing the borders. Failure to enforce standards for grain crossing the borders is a very big challenge. I don't know, I believe it also concerns the other exporters. Maybe we shall get from Uganda Export Promotion Board, but most of our grain go across to Kenya, to Southern Sudan, without being graded and sorted. And this thereby underselling the people that borrow funds and put it and process it as required. Poor and inappropriate inputs and technologies, poor fertilizer use, inefficient and poorly regulated seed industry, high road haulage costs for grain coming from farms to processing and to regional markets, among others. High power costs. And then this part is part of the solution. Yeah, part of the solution and not a challenge is to expedite the rural electrification program to generate power demand and lower tariff rates, extend power to local industrial centers to increase power demand, increase competition in the power sector by licensing more distribution companies, among others. Provide support to financial institutions, restructure the SCF, maybe by recapitalizing it, enforcement of standards, enforce the grain policy, poor inappropriate use of input, empower cooperatives, among others. So, how does one access the SCF? The clients don't come to Bank of Uganda. We are just administrators. The client applies through a PFI of her choice. The financial institution, which I'm calling PFI, analyzes the project in accordance with the SCF guidelines and their credit policy. The PFI approves the facility, extends the loan to the borrower, and applies to BOU for the 50% GOU contribution. The 50% or 70% GOU contribution is given to the financial institution at zero interest, as you've heard before. And then the lending is 12% or 15% when it is 12% or 15% when it is for the grain trade. Key achievements. what are the key achievements? Before then, I just want to tell you about the performance before the key achievements. Before the interruption of COVID-19, the agricultural facility, I'll show you this slide later. We had disbursed 520.42 billion to 772 clients that include all the beneficiaries along the agricultural value chain. 772, and we have disbursed 520.42 billion. And almost all the banks regulated by Bank of Uganda are participating under the scheme. So what are the achievements? What have we achieved? One, we have extended credit worth 526 billion. Sorry, the latest is what I have to 800. This 526 is now up to September. The one I was reading is as at 30th June. But as at 30th September, we have extended 526 billion to 813 clients that include large aggregators with outgrower schemes, reaching approximately 15,000 micro and small scale farmer countrywide, enhancing farmers and agro-processors access to affordable credit facilities from the financial institutions, including the 20 million under block allocation. Alternative collateral arrangements. This alternative collateral arrangement has helped many of our farmers, many of our exporters, because now they can borrow without collateral, promoting commercialization, mechanization, and modernization of the agriculture sector, increasing value to agricultural projects, resulting into import substitution of produce that attract better prices locally, thus increasing farmers' income. Boosting export promotion of Ugandan-made products as depicted in the various sectors, like the dairy sector, the tea and grain milling sectors, among others, whereby you find now in our supermarkets a variety of products Ugandan made, packaged, yogurt for the dairy, milk, the chicken in different shapes and sizes. We were actually impressed during the COVID-19. One of our finance projects was the one feeding the region. They were producing a lot of that product, was poultry related, and most of the products they were exported during these trucks that were also bringing in COVID. We are taking most of these products, and we are happy to note that food security was realized here. Another one is increased level of confidence in agricultural finance to financial institutions, resulting into increased lending to the agricultural sector. Initially, most of our financial institutions were actually risk averse whenever it came to lending to this sector because of the inherent risks associated with lending. But because the government came on board to share the risks, most of these financial institutions actually embraced agricultural lending. And as we talk, they have developed innovative financial products in agricultural finance and improved risk management tools in most of these banks. You find they have agriculture departments. You find they welcome our borrowers that are borrowing for agriculture related activities, whether it is fishing, whether it is horticulture, floriculture. They are more welcoming than they used to be because of this fallback under the SCF. Increased employment levels as more people are employed in commercial farms and other funded projects. Like I've told you, the grain trade has really attracted a big number. It has also prompted development partners to initiate guarantee packages and agricultural insurance to support financial institutions to on lend to high risk areas in the agricultural ecosystem. We have had a number of development partners coming to negotiate with us coming to give guarantee packages to support agriculture lending, which was not the case in the past. The SCF has also maintained the SCF has maintained its prominence as a proven distribution channel under the public-private partnership approach for medium to long-term financing to value chains in the agriculture sector at more affordable terms. There are various challenges, but I don't know how much time do I have? Do I have more time? Can I continue?
Yes, please, you can continue.
Okay.
And
In spite of the success stories, we have also encountered a bit of challenges that include high risk, systematic risks from the environment, the drought, the flood, the diseases to the most of the crops, and markets, price volatility, trade policy and trade practices affecting exports and the market access is well recognized as a challenge. Inadequate rural infrastructure and socio-economic conditions at the farm level. Because of the poor infrastructure in some areas, some of the produce cannot reach the market in a timely manner. And also, sometimes it reaches when it has a dent, some already spoiled and not well graded for export. Limited awareness of the scheme by prospective beneficiaries. Some of the beneficiaries still feel they are still lacking. They don't have enough knowledge. Of course, lack of collateral by prospective borrowers. Some financial institutions are still risk averse, much as more are on board, but we still have those. We still have those big banks that are still not participating as required. And also holistic approach as a challenge. Commercialization and modernization of agriculture requires much more than access to affordable sources of finance. For example, we have a need of genuine inputs and favorable policies. We've had some of our clients that have bought inputs, seeds that don't germinate, fertilizers that don't do the work they're supposed to do, pesticides that don't kill the pests. And for livestock, it's even worse. Some of the diseases, the drugs on the market cannot cure the ticks, even a simple tick, and they lose such animals. Lack of suitable financial products to meet the needs of very rural micro SMEs. That's why we need a holistic approach. Lack of reliable and adequate information on good agricultural practices and financial literacy. Bank of Uganda has started on this financial literacy bit. We are actually educating the farmers on the best way to handle their financing and succeed in this business of exports and the whole productivity and exports and the like. But the rest of the information, you find most of our exporters are having a challenge whereby you export and the whole consignment is rejected because of quality control is a bit inadequate to some of our farmers. We thank those really that have measured to the expectations of the European Union demands and the other countries. Lack of access to the range of inputs required by farmers. Inadequate post-harvest handling equipment, like silos and warehouses. Much as we have financed most of these, but in the rural areas, there is still a gap. Poor record keeping by farmers on which the financial institutions can base their lending decisions. So we have some solutions as I conclude. What are these solutions? I've already given you the solutions for the grain. And now these ones. Strengthen cooperatives and other institutions to support SMEs right from the household level. These SMEs should not sit and wait to get the funding from the big financial institutions. We respect the circles, by the way, we respect the cooperatives because it is through a group that they can succeed individually. Some of these circles are being, I know some of you are going to ask me, are circles also being financed under the SCF? Some of these circles come as a circle. You can also come as a cooperative, as a group. If you are in a circle, very organized, with good record keeping, with good genuine governance, then you can borrow as a circle. Make sure it is registered. You can come to Bank of Uganda or to your financial institution, because most of the circles have accounts in other banks. We also have a few of the tier 4 circles, but they have not yet come on board, though they are allowed, they are eligible. The cooperatives, we really welcome them, because it is through cooperatives that our farmers do deep in the rural areas, those small scale farmers, those micros, that at household level can sell their maize. I remember those days. This is the maize that used to pay school fees for some of us, where you harvest, whether it is 1 tin, 2 tins, take to a cooperative. The cooperative will have an account in another bank, and that bank will come to borrow for this cooperative. You borrow as a cooperative, and then you give to your small scale farmers. You can also buy a tractor in order to mechanize. If we had succeed in the mechanization of this country, you can be in a cooperative, buy a tractor, and it will serve all these small scale farmers at household level. You keep lending it out. And whether irrigation system or not, it's better to be in a group if we are to serve these small and micro scale borrowers. Another solution is promoting financial literacy. We have said Bank of Uganda is already doing this. Encourage farmers to package the loan applications very well. Good project feasibility proposal. This is very important to us. I know a number of our borrowers have been complaining that when we apply for SCF loans, they take long. I would like to inform you that they don't take long because we are sitting on them. They don't take long because we are not handling them effectively, but most of them come when they are substandard. I must confess, some of our banks, the fact that they have not been lending to the agriculture sector, have clients that are more interested in the more clients rather than the quality of the work. So they bring half-baked project proposals, and when we find we cannot finance them because we are managing public funds under the Public Finance Management Act. Therefore, we have to be careful. This is your money, this is public funds, and we cannot just give out the money. The proposal has to be well written. Therefore, encourage farmers to package the loan applications well, and also financial institutions to train their officers handling credit well, and there we can promise a feedback in a short period. Having different loan products for various farmer categories at different levels. Yes, we have loans for the big aggregators that borrow in billions. We have loans for the medium scale farmers. We have loans for small scale farmers. As we talk, we actually don't have a minimum, but we can only refinance a bank 10 million. Remember, the banks are supposed to give, when we get an application and we approve, the bank is supposed to disburse 100% of the loan requested for and ask for reimbursement of 50% or 70%. Therefore, we trust these banks, we rely on them as our partners to disburse the whole amount, and we reimburse the difference, the portion for the government contribution. Encouraging public-private partnerships. Ladies and gentlemen, public-private partnerships is the way to go. Actually, there is another P that we are adding of late. We are adding people, public-private partnerships that people have to embrace. We need that discipline. We need to find that these people can be trusted, they can be genuine, and they are interested in promoting this very important sector and our economy. Therefore, we need people, public-private partnerships so as to succeed. Establish and strengthen financial infrastructure, such as credit information bureaus, payment systems, collateral registries, and commodity exchange. Develop agriculture insurance schemes, such as crop or weather insurance, to mitigate the risks in the sector. We are happy to note that the government of Uganda has already started a scheme in agriculture insurance, and maybe the Ministry of Finance lady can talk more on it, but it is under the pilot phase, but it's doing very well. And we encourage the farmers, we encourage the exporters to utilize agriculture insurance, to mitigate the risks that they face while exporting. Conclusion. It is worth noting that the government of Uganda cannot manage to solve the challenges of agriculture financing in isolation. It requires a combined effort of the farmers, the private sector, the development partners, and agribusiness advocates, among others, to reach or achieve our goal of NDP3 objectives. With full support of all these, it is hoped that the agriculture sector will be driven to a higher level. Thank you very much.
Thank you so much, Madam Rosette Bamwine. We really appreciate your presentation. I think it was full of a lot of content, a lot of value for our exporters. And I'm sure all the questions they keep posing to us in terms of their issues on financing for their agricultural production and exports have been answered. Now, Madam Bamwine touched a lot of issues. And one of the things that struck me is the fact that they've already lent to over 800 clients and billions of shillings. Now that proves to you that this is something that works and will definitely be of value for you to access. Another issue to note was the fact that it's not Bank of Uganda, they are only administrators, but you can access this facility through commercial banks. Now we have received some, feedback about this AFC from our exporters who go. When you go to the bank, be specific and tell them you want to access the AFC that is from Bank of Uganda, because normally banks have
ACF,
products.
ACF,
sorry, Agricultural Credit Finance. So normally,
facility. Yes,
banks have
credit facility. Yes.
Yes, madam.
Yes. No. Go ahead.
Okay. So normally commercial banks have other agricultural facilities. So please be specific in what you are requesting for. The other key issue she mentioned, which we have also noted as Export Promotion Board, is the finance records. Most of our exporters, especially the small ones, lack proper records. And if you have to access any finance, the financing institution would really want to know how your financial history stands and how you are able to pay back that money. So with that simple summary, I'd like us to stop at that point with the Bank of Uganda presentation. Madam Rosette, you can now pull down your presentation. I will request that all of you who have questions, please post them in the Q&A. Post the questions in the Q&A section. We shall be able to answer them at the end. Madam Rosette, I hope you'll stay with us until the end so that we have all these questions answered. So post your questions in the Q&A session to enable us respond to them at the end. Ladies and gentlemen, now I'll request my colleague Noreen to present about market price information. We should have had Ghana Development Bank and the Microfinance Support Center. Unfortunately, we have not been able to have them today. They have both sent in apologies, but we shall get you their presentations because they have been caught up with the other assignments, so they couldn't quickly change and be with us. So we have a presentation from UDB, which I'll handle after Madam Noreen has spoken, and then we'll go into the Q&A. So Noreen, over to you. You're welcome.
Thank you. Brenda. The Executive Director, Uganda Export Promotion Board, Mr. Eli Twineyo. You, the captains of the export ship, the exporters of services and goods, fellow resource persons, colleagues at UEPB, ladies and gentlemen, a very warm greetings from Uganda Export Promotion Board. My name is Mrs. Noreen Kamot, working as a Senior Trade Information Executive in the Trade and Information Division of Uganda Export Promotion Board. I'm happy to be speaking to you during this export readiness virtual training. Presentation outline. We'll look at introduction, background, how to determine export price, the role of UEPB in helping you determine export prices, and conclusion. My topic is, I'm going to speak to you about market price information. As an introduction, I would want to say that COVID-19 pandemic has affected livelihoods, the economy, and changed the way we operate. But what has not changed is our mandate. That is Uganda Export Promotion Board's mandate to coordinate, develop, and promote exports. And we continue to have our commitment to prepare farms to get ready for export through our programs, the Export Readiness Program, and the export aftercare services. Maybe let me talk a little more about our new program, which we have embarked on this year, this financial year, the aftercare services. Here we are looking at both our exporters being paid, because we've had a number of challenges, where our exporters send consignments and they don't receive payment. And we're also looking at it the other way around. We receive payment from our foreign buyers and we don't deliver. So that now is forming a core, in our activities. We are trying to see how then do we resolve this to ensure that we improve the country's export performance. As a way of background, I'll look at marketing, because pricing is one of the pillars of marketing. And marketing is simply a process of developing, promoting, and distributing products to satisfy customers' needs and wants. Then we look at the current marketing strategies under the marketing concept. There are now 8. It's important that exporters, as you look at the market and the export market, you consider this seriously. We are looking at the product, promotion, place, price, people, processes, physical evidence, and partners. Partners is a new strategy which has come in, and I'm glad that the previous speaker spoke about partners. They are very key in ensuring that we can be able to sustain our exports and also compete. But for this presentation, I'll speak briefly about the 4 original P's. That is the product, promotion, place, and price. Emphasis will be on price because my presentation is about market price information. Not forgetting that all this you're doing with the objective of you getting paid, as well as also you being able to target. So in summary, we are looking at your product. Is there a demand for the product or service? how to make the product appeal to consumers through packaging, ensuring compliance, even branding, looking at promotion, very key, because you need to be visible in the market through advertising, publicity, and also creating awareness. The IT, I think, has revolutionized the way we do business. There's a lot we can do in terms of making our companies or our products visible to quite a number of customers across the globe. We're also looking at the price. How do we get the right product to the right place at the right time and with the right amount at the right time? All this is also very important. Also storage, warehousing, transport, logistics, very important. But the discussion of today is about price. So we are saying, how does market information help you, one, arrive at the price, ensure that you're competitive, and besides, you're in business to make a profit. So how do you ensure that your pricing helps you to make the profit you're looking for? As a target market, you're looking at the customers, those who are most likely to buy from you. So in terms of price is the value of money placed on a good or service, and is usually expressed in monetary terms. The key to pricing is understanding the value that buyers place on your product. We just want you to look at some of the common currencies and their symbols. Of course, they're more than this, but we thought you could just look at this and appreciate that when you're quoting prices, much as you're doing your costing in Ugandan shillings, you have to bear in mind that you have now to have the Ugandan shillings is equivalent in the mostly traded or mostly accepted currencies. And these are some of them: the US dollars, pound, and euros. Then we look at the factors that you would consider when you're coming up with an export price. The first is the cost. You have to be financially informed in terms of, before you set your pricing, you need to work out the costs involved in you running the business. They're both fixed costs as well as, those which are direct, which are directly, which you have to incur for you to be able to deliver a commodity to a named point B in the market. We also have to consider customers. You have to know, when you're at the back of your mind, you have to know your customers and really what are they paying for. I'll just give an example of now what is currently happening, because everybody now wants the COVID-19 treatment. People believe, we've been advised by the health community that you need is more of a diet. So if you're delivering, are you delivering a product which the customer will consider as a product or a food which will give them the nutrients they will need to boost their health? So once you know that, then you know what price you will attach to that. It is also about you positioning your product in the market or yourself in the market. How do you want people to consider the market to consider you? If most expensive, then your pricing will reflect that. Middle or cheapest, that or cheap, that also informs your pricing mechanism. Then you also have to consider competitors, because we are aware that we are not the only ones supplying. There are other countries supplying in the same markets we are going to. So there's need for us to do what we call competitive snooping, trying, and Export Promotion Board can help you in achieving your competitiveness, snooping, trying to know what other competitors or suppliers are charging, and for the prices which they are charging, what are they offering for those prices? Is it timely delivery? Is it quantities? Is it unique selling preposition? All those all those contribute to attracting buyers to specific pricing strategies. And above all, we are in business to make profit. So it is important that as you look at all your costs and the four other factors, you should not just pull a figure to be competitive without you considering how much profit you would want to get from there. So looking at the 5 factors, that is the costs, customers, positioning, competitiveness, and your profit, you then can be informed on the price to set. So what is the role of Uganda Export Promotion Board in helping you in the 5 or so factors which will help you price competitively and also be able to make profit? Uganda Export Promotion Board provides market information as well as advisory services. This financial year, we have been able to subscribe to price data, and one of the sources is the Fresh Produce Journal. I'm sure that we've been disseminating this through association, especially fruits and vegetables, because it's to do with fruits and vegetables in the UK, the wholesale prices in the different markets in the UK. So, but for those who have specifically made a request, we have also been able to reach them. So in case you would be interested in these prices, send us your info. If you are not receiving, we request that you share your details with us so that we can be able to share such information. Also, this is also another important tool which we use in supporting the advisory function. You see on the screen, you've seen is price data for SimSim over a period of 5 years from 2015 to 2019. As you see on the first column, these are the importers, countries which are importing SimSim from different destinations, of course, including Uganda. We also have the different years, price index for the different years. For an exporter, this gives you an idea. That's why we always emphasize that when you go into export business, it's important for you to do market research. And at Uganda Export Promotion Board, we can be able to guide you this because we have tools, market information tools to guide you. For example, the IT trademark, which gives around price information of 5,000 products, importers, and also the different import requirement for the respective countries. So you're always encouraged to be in touch with us for us to be able to share. And we are happy that we are able to share this at this particular moment when we are preparing you to get ready to export. For China, for example, in 2015, the price they bought SimSim at $1,394 per metric ton. But over the years, and SimSim is an agricultural product, so you will expect price fluctuations. Then that causes us to really be in touch with the market in terms of doing research. We look at US, it's a very attractive market. I think we could see the figures above 2,000 metric tons 2,000 US dollars per ton, which is a very, demand is high, it shows, but it also comes along with the import requirements, which are a bit stringent, and some of our SimSim goes as organic. For us, as a country, we know that we are gifted by nature, so most of our products are considered to be organic. But that in the international business or in the export business, that is not the case. If you are saying that your product is organic, you have to have proof. There has to be as such somebody who confirms that these are mostly accredited international organizations which do audit and confirm that true your product is organic and therefore can be able to attract a higher price as compared to the conventional products because of the extra and the issue of traceability, and also ensuring that the product does not have chemicals, is organically grown. So all that are costs which then you consider when it comes to pricing. That's why from this, our interpretation or our guidance is prices are never fixed. They're always fluctuating. So it's important for one to ensure that they do research and be able to come up with a price which will be able to make them stay in business. So who will leave you with these questions? If you're going to price competitively, these are some of the questions you consider. How much are the customers willing to pay? Yeah, if you say 8, why not? Maybe why not 10? So all this consider $8, why not 10? All this, you arrive at the final product when you're considering how much the customers are willing to pay, and is the price competitive, and can the company make a profit and therefore be able to access, all the facilities which government has put in place for the exporters, because the company has to provide that is viable for the company to access the finance or any government intervention. By way of conclusion, I want to say that export managers should refrain from try and error approach with prices, because setting appropriate prices is crucial to the firm's economic performance in the export markets. And that's why the first presenter was talking of foreign earnings. We get this when we are able to price well. Without that, then we have a challenge in sustaining our, foreign earnings. With that, I want to thank you, and for God and my country.
Thank you so much, Noreen. Thank you so much for that rich presentation. Dear participants, like Noreen has mentioned, one of our mandates as Export Promotion Board is to share market prices. And we have information now, like she mentioned in her presentation, that we share regularly with our different exporters, but also associations. So we thought it's important that we bring to you this detail so that as you price, you are able to access this information and compare yourselves to what the rest are doing out there. So Noreen, thank you so much for all the questions. I can see we have a number of questions that have come through in our Q&A session. They are very welcome. We shall soon get into that. Now, as far as our program is concerned, we should have had 2 presenters, one from Uganda Development Bank and one from Microfinance Support Center. Unfortunately, the 2 are not able to be with us, but what we have done is pick presentations from them, which we shall share with you. And I also want to emphasize to all our participants that even the recording of today's training will be shared, so that for that information that you didn't pick well, you'll be able to refer to the presentations and to the recording and follow through. And we encourage you to please contact us whenever you need support. That's why Uganda Export Promotion Board is here. We are basically the center of all activities that surround exporting in this country. So whether you have a question in standards, whether you have a question in financing, marketing, please raise it with us. If we can't respond to it immediately, we will then point you in the right direction. So allow me now to just take you through a very simple presentation that we picked, that UDB sent through. very simple, but I hope it will be able to also, enable you appreciate the basics of what UDB does for exports, and then we shall give you the right contact people to speak to whenever you have issues. So I'll now just share my the presentation. IT, can you enable me to share this presentation, please? Noreen, please unshare your presentation. Noreen, please unshare your presentation so that I can share the UDB presentation. Noreen, can you unshare your presentation, please? Okay. Okay, so I'll briefly take you through what UDB shared with us. UDBL is fully owned by the government of Uganda, and the mandate is to finance businesses in the line of the National Development Plan's key priority sectors. Now, the key priority sectors include primarily agriculture, agro-industrialization, manufacturing, infrastructure, human capital development, and tourism. I also mentioned that the special products include asset finance, where the bank imports machinery on behalf of the client. The client contributes 20%, while the bank contributes 80%, and the asset secures the borrowing. Okay. The second one is trade finance facilities used to support the importation of various raw materials for manufacturing, as well as financing exports. The third is can also be uniquely structured for specific transactions, for example, contract financing and structured trade and commodity finance. Then there is also equity investments. Now, number 4, it says the bank can also finance startups. So kindly note that many of us shy away from approaching banks because we think we are startups. But there you go, UDB is saying they can do that. Then mainly, they finance locally owned companies, not foreign or individual owned. Okay. Then the minimum amount is 100 million. The maximum amount is about 7 million US dollars, or the equivalent in shillings. The interest rate ranges from 12% for agriculture and industry and 15% for the rest. So the contact person, so take note of this, is Ms. Diana Okot Chono. She is the investment manager of trade finance in Uganda Development Bank, and that is her contact and email. So we shall share these details with you at the end of today's training. But I thought it important just to, stimulate you and show you that UDB also has a lot for you. So please keep that contact and raise Diana whenever you are interested. Right. So ladies and gentlemen, we have now come towards the end of our day. But before that, we shall now go into the Q&A. and see what the different participants are asking. Okay, so I will go to the Q&A section now and look through the questions. We start with the first question, which Christine Tosime raised. We request for the same insight in the ICT sector. So I think this was during the time Madame Rosette from Bank of Uganda was presenting. So the ITC group is also requesting for that kind of consideration like you've done for agriculture. So Madame Bamwine, probably you will respond to that. I think you have a second question. Let me pose the two questions to you and then we can go, you can be able to come in and respond. The second question says, I have a factory, and this is from Enid. I have a factory on rented premises where I extract shea butter from shea nuts. If I request for a facility and a block allocation to help me buy more nuts to stock during the season or acquire a new equipment, would I be eligible for the 20 million? Madam Rosette, if you're with us, I kindly request that you unmute and respond to those two questions.
Thank you, Brenda. There was actually another question before that talked
Okay.
of somebody chattel mortgage, wanted to know about chattel mortgage.
Oh, yes, yes, madam.
Okay, I'll start with this one. We request for the same insight in the ICT sector. I'd like this Christian throw more light on what she means by this. Does she want loans, okay, to buy maybe ICT gadgets? I don't know what she means. Let me answer the one of chattel mortgage and then we revert back to her question.
Okay.
There was somebody who asked that, can you throw more light on chattel mortgage? Chattel mortgage is actually a form of collateral that anyone can afford. You just come to your house. Chairs, if you have a nice set of chairs, you can borrow that 20 million and you mortgage your chairs. You can mortgage anything in your house, a nice bed, a nice, maybe you have a set of plates, cutlery, anything in the household. It's what we call chattel mortgage. Apart from the land, apart from this big machinery and equipment, something you have in your own home. I think these circles are using it. You can borrow and then mortgage your chairs. No one can take them. That's one. Two, this one about shea butter, factory on rented premises where I extract shea butter from shea nuts. If I request for a facility under block allocation to buy more nuts to stock, yes, you are welcome. You'll get this facility. One, I emphasized your relationship with your bank. It's very important to be bankable. Whatever little money you are earning from your shea butter sales, bank. By the way, even if you bank it today and the following day you withdraw it, still the bank will know that you have an income that is coming in, what we call inflows and outflows. So when you are in business, it's much better. Whatever income you get, bank it. And then when it reaches you, that a time that you want to purchase more stock, then you withdraw it. It will show us inflows and outflows that your business is actually earning you money. It doesn't matter how much you have as balance on your account. Doesn't matter. But what matters is, are you earning anything? The earnings or the inflows and outflows. I hope I've answered that. And the shea butter, yes, you're welcome. You can go to your bank. You ask, when you go to the bank, I think Brenda simplified it. Emphasize, most of the banks want to give their own money at a higher interest rate. And they will tell you, SCF, that one will never come, you know. So insist that for you, you want the ACF money at 12%. And if it is grain, it is 15%. So you qualify to actually improve on your shea butter business. You can even buy a machine that can crush, you can buy a machine that can package more, and you keep on improving more and becoming better to earn better. Then for ICT, maybe I'll communicate to my bosses that you also need a scheme like that. But in case you want to add on, I mean, to elaborate more on what you meant, you can. Thank you.
Okay, thank you very much, Madame Rosette. Christine, in case you have any addition to your question, please submit. Probably something I could say, we have exporters of products and exporters of services where ICT falls. So they're also looking at a similar kind of, this is my assumption, a similar kind of arrangement for the service exports where ICT falls. But I'm sure Christine will add on whatever she's trying to mean in that. Then our next question was to Madame Annette. Thank you for recognizing the challenge of financing. We are having a big problem as SMEs when it comes to the requirements by the financial institutions to extend loans to us. Requirements like collateral security, which must cover the loan, signed contracts, and references from former clients, and especially the recognized ones. How can you help us ease these requirements for us to be able to access finance and compete favorably? Madam Annette, are you with us?
Thank you, Brenda. I'm still with you, and thank you.
Okay, please proceed.
However, I did not get your insight into MSCL's presentation, Microfinance Support Center.
Unfortunately, they sent in an apology at short notice. We were not able to get them because the person who was supposed to present was called into an urgent meeting. So they sent in an apology. But what we shall do is get the presentation and see if we can share it.
Okay.
Yes, madam.
So, because the response to the participant highly lies in that line. In line with MSME's Microfinance Support Center is that government arm who has had the mandate to provide low-cost financing to the MSMEs and groups. When you make groups and circles, the bargaining power and your credit worth improves. So it will be MSCL to reach out to, because once it improves your products, and asset financing is also looked at in that category of MSMEs. That is where the answer lies in. So I hope that one sufficiently provides the question, the response, and where to reach out to MSCL. Then Brenda, I'll also chip in from Madame Rosette's presentation. The agriculture insurance scheme, on the other hand, looks at de-risking the agricultural sector. Because once an agricultural enterprise is introduced to the scheme, it is insured. And the farmers' subsidies and premiums are looked at. So the risk of the farmer is taken on under the scheme. And therefore, farmers can take on their investments even on large scale for export with minimal risk because the losses are insured and compensated. Madame Rosette had asked to throw light on that one. And I will also slot in one of her key challenges, which was relating to high power costs. This is truly a big challenge to any investor, whether local, large, or medium-sized. It is unfortunate that it is taking the biggest jerk of the costs of operations. However, in renegotiating the Umeme concession, it was highly raised, and we are thinking if government sticks by its guns, we should be able to see the tariff try to come down. The bringing on board of Karuma and Simba Power is seemingly not bringing a solution because the transmission is still a challenge. We still have a challenge with transmission because we are not able to evacuate, and of course some of the loans brought about some wind energy. But at least where we are heading to, it's being tackled. It is one of the issues being re-emphasized at the ministry. I'd like to submit. I think I don't have any other more.
Yes, thank you so much, Madam Annette. Microfinance Support Center, in their last presentation, also mentioned that they have consultants who work closely with them, who support the different their different clients on financial literacy, and they would be, like Madam Annette has said, the right people to help you with this. On the issue of securities, don't shy away. They have different other products that would probably fit in what you have. Now, I think the final question we have here is from Simon, who says, does ACF fund a company which is still going through its export readiness check assessment? Now, Simon, I would like to respond to this and say yes. As far as our export readiness assessment check is concerned, it is not to stop you from assessing any of this financing that you have. We are not even one of the issues you have to actually meet. What the finance institutions are trying to do is make you better ready for exports. So please go and access what you have from the different institutions, and then prepare yourself better for exports. So these are all the different channels that we use to actually get our exporters prepared to export. So I think that was the last question, because the final one is similar to that one. I don't know if we have any more questions that have been raised. In the chat room, let me see what was in the chat room. Somebody was asking for the email, that one received it. The rest are really appreciating your presentations. So do we have any other questions, ladies and gentlemen?
Brenda, I have a comment.
Yes, please go ahead.
Yeah, actually, we wish to extend our appreciation to the Export Promotion Board for organizing this very important workshop, and especially where we can get a chance of disseminating the information to the public, specifically the exporters. I can see this one's asking whether the ACF fund company, which is can finance a company which is still undergoing export readiness. I know Export Promotion Fund, you train your people to be ready for exports. And it is also our interest to have them enlightened before they venture into exports, because we have had some of our clients losing out and failing to pay back because of not being ready and information gap of how they should export. So we thank you so much for doing this, and we thank you for inviting us to share with the people, and we request that we are always ready to give this information, and that the exporters, when they come to you, kindly inform them they are also eligible. Apart from the freight charges, the rest really, if you want to put up a cold storage chain, a truck, if it is fishing, we have given fish cages for those that may wish to export the fish. If you want the greenhouses, all those we do give. There was something some time back, information in the papers where they said the ACF does not support exporters. We really do support, because export is at the end. Yet, right from the beginning, the whole value chain is supported. The only thing we don't finance so far freight charges and giving you the air ticket. But the rest, please, you are welcome. Thank you.
Thank you so much, Madam Rosette Bamwine. We fully appreciate your partnerships, and every time we call upon you, you're very ready to come and join us. We really appreciate that. We look forward to more and more trainings of the same. Now, for the lady in ICT, next week we shall have something for service exports, which basically tackling, the same kind of issues in the service export sectors. So if you haven't got it complete here in today's training, there will be more towards the end of the month. We shall let you know. So for the rest, please keep in touch with us. This is the journey for preparing you to export. So it is not a very short journey. It is long and continuous, and we're here to continue to serve you. If we don't have, do we have any more questions before I conclude? Any more questions? Okay, I don't seem to be seeing anybody interested in raising a question. So we shall share the recording. We shall also share presentations for what we have had. We apologize that we are not able to have the other two, UDB and Microfinance Support Center, but we will definitely get back to you with presentations from them as well, and all that has transpired. So ladies and gentlemen, without wasting more time, I'd like us to conclude this training now and wish you the best as you continue to export and prepare yourselves for better exports. Thank you, and this concludes our day. So for all those with questions, you can raise them with Export Promotion Board after here.
Brenda, there's one final one from Joshua Baliejusa, who's
Yes.
asking that, is a sole proprietor eligible for financing? Yes, for us we finance all, sole proprietor or company,
Okay.
or SACCO. Thank you.
Okay, so thank you, Madam Bamwine, for that. But in addition to that, as Export Promotion Board, we encourage companies to export. It is so difficult for you to export as an individual. So if you're getting into exports, that's why we have this export readiness assessment. You cannot get onto the assessment if you're not a company. We need you to be formal and a company because you're going to transact internationally. Not everybody knows the individual Brenda or the individual Rosette, but we look at you from the company perspective. So we request that you register yourself formally with the Uganda Registration Bureau. Then you get a TIN number with Uganda Revenue Authority, and then you get onto our assessment tool online, and then we start the process. Okay, so for financing, it's a little different, but as you get into exports, you'll appreciate that need for you to formalize into a company. Okay. Right, any other questions? Okay, so I think this brings our day to the end, and I can ask our team to finally close our meeting. Thank you very much. Have a blessed day.